What if I told you that you're probably putting your insurance on risk too late? Most people put their insurance on risk at the point of exchange or maybe even completion. But realistically, you probably should be putting it up front as soon as the case has been submitted. This was a message sent to me by one of my clients last night, and it's what inspired this video. They actually sent a message saying, full solution, in the bag, insurance is going on risk tomorrow. They then said it was £190 per month premium, with £105 going on risk tomorrow and the mortgage protection being done when we exchange. Now, I didn't always think this way. To be honest with you, I'd probably, like everybody else listening to this, would be worried about putting it on at exchange. I'd be like, oh, well, you should probably have it on exchange, but maybe push it to completion if the client asks. All of these fears and scary things that we all have. And it was only over the last 6 to 8 months that we've been moving clients to push towards doing it on actual point of submission and putting it on risk as soon as possible. And the logic makes sense. And let me explain kind of why I think that is the case. So if we unpack just for 1 second, so let's say when it comes to life insurance, when is life insurance needed? It's actually needed at the point of the mortgage. Life insurance is used to cover a mortgage. The reason why we get that cover is to cover our mortgage. That's it. There's nothing else. Without a mortgage, there is no need for us to have that cover realistically. Now, I know that many people might argue on that and say there is or isn't, but it really isn't much. Life insurance is a very standard basic product that's not really needed. When it comes to the mortgage, that is the only thing we need to do on exchange. If you put life cover in place before the mortgage is actually due, like before the actual mortgage is exchanged, then obviously they're legally bound, then realistically, it's not really worth doing. I think that is actually unsuitable for the client personally. But let's play devil's advocate now. Let's talk about income protection. When do you need income protection? Income protection, protecting your income. Now, if we're thinking about this, your client is getting a mortgage. This is what I said to my clients when I work with them. Your client is getting a mortgage and they need an income to get that mortgage. There are actually some providers out there that will use income protection as income towards getting a mortgage. And so the first thing we really want to be protecting is the income. Irrespective of when the mortgage comes in place, your income funds purchasing the house, but also funds your lifestyle. Traditionally, about 30 to 50% of your income is actually spent on your lifestyle. It is way higher than people expect. And the last time I checked, your lifestyle is existing right now. You know, when they're talking to that client, your lifestyle is still being paid. Those bills are still coming out. And so an unprotected income is dangerous. So realistically, in my opinion, we should be putting this on ASAP. IP should be going on ASAP. Love the acronyms there, but it really should. There's no need to wait. Let's talk about family income benefit, which, by the way, is probably one of the most undersold policies and yet the best policy. I would highly recommend people understand family income benefit. I'll probably do a video more on family income benefit in the future. If you're not selling it, it sells itself. It's so good. But again, what's family income benefit do? Well, it pays an income if you were to die. So it's income protection, but on death. Family income benefit is an income or an amount of money that can pay an income on the point of death. When should this be paid? Well, this should be paid ASAP. There is no reason why this should not be paid to be on risk straight away, because you need that cover. Now let's talk about critical illness. Well, critical illness, if we think about kick, let's talk about that one. Well, realistically, what is kick for? Well, kick isn't really, when I work with clients anyway, we talk about kick isn't for the mortgage. It's for household modifications, so any household modifications needed due to an illness or injury. It's for any unforeseen medical bills, because let's say if you want to go down alternative medicines, you want to do diet changes, supplement changes, these things are very expensive. I had a friend of mine who actually survived stage 4 cancer. His tumors have gone. It's pretty incredible, actually. He did it through metabolic therapy. It's expensive. Like, it costs a lot of money. He didn't have critical illness cover. It didn't pay. So, you know, he had to get loads of heat. Luckily, he makes a lot of money, but that saved his life. Alternative therapy is one of those situations. So that's what it's for. It's also for an income. This is what I do say to people. It's actually an income for the partner. So if my wife, for example, was to get sick, was to get cancer or something, I would want to be able to take time off work to be able to support her. The critical illness cover can do that. So all of these things are not related to the mortgage. So when should you have that? Well, again, ASAP. At the point of submission, the package, the mortgage, the full solution is life, IP, kick. It's the whole lot. That is the full solution. And 100% it is what your client should be taking. This package, which is the IP, the fib, and the kick, should be taken on risk ASAP, meaning at submission. So as soon as the terms have been agreed, it goes on risk. The life insurance, that should then be done on exchange. That is how it should be done. Now, why is this important for you as a broker, and good for a number of reasons? First of all, let's take it to the client first, not the broker. For the client, the great thing is they actually are only paying for the things they need. So this is how you'd frame it. You say, look, you're only going to pay for the stuff you need, and you're going to get it when you need it. So you'd frame it this way and say, great news is you don't actually have to pay for the life insurance or the mortgage insurance until the exchange. You do an assumptive close. You need to put this in place ASAP, but great news is you don't have to put that one in place until exchange, because that's tied to the mortgage, not to your entire lifestyle and income. What you're doing is reframing this as a positive, that one of them is taken later. Instead of constantly asking their permission, which we do all the time, like, would you like it now? Would you like it early? That's not what you should be doing. So it's actually better for the client. It's a better outcome for the client because they're going to be protected earlier, which is what we want. It also stops any unforeseen terms lapsing because things take forever to go through. All of those things are a problem. But one of the big ones that I'm a massive advocate for, and why I love it, is why should you be doing it? Because as a broker, it creates cash flow, okay? It creates cash flow. That's what we need. And in our business, as brokers, we need cash flow. It is so hard as advisors to make money. Well, not make money, you can make good money, but it's so hard to get cash flow in, especially at the beginning. Because if you've got a mortgage, it takes, you hear this 3 months, it's like 6 months to complete. If you're charging fees, if you're not taking them on application, which you absolutely should be, if you're taking them on offer or at completion, then again, you're kicking your payment a lot longer down the line. So the work you do today, you don't get paid for. But this increases cash flow significantly because you're now taking a big chunk of that commission. Let's go back to our example that we had with my client here. So if they're taking £105 or £190 of premium, so if we did 190 and times it by, I normally do it by 21. So if we did 190 times 21, that's going to be £3,990. So let's say that's a £3,990 commission. But what actually is going to happen is that they're going to take 105 times 21, and you're going to get £2,205 up front pretty much straight away. So in the month or within the first 6 weeks, depending if it goes to medical or not, you're going to get a cash injection into your business of £2,200 instantly injected into her business. She's going to make another £1,700 worth of commission on that. That's going to get paid later at the point of exchange, which is what we want. But there's going to be an instant amount of money coming into the business. That's what we want to have as a broker. It's so useful and so vital. So start putting it up front. There's no reason why you can't. Now, if you want to learn how you can retain clients and build repeat business and referrals, check out this video on screen right now. Give it a click.